The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time. And right here at Tiger Technicians Hour, I'd love to hear from you at 877-927-6648. Now, what's really important about today is it is probably the last day. Maybe you got a little bit of time tomorrow morning, but basically it's the last day to sign up for that fantastic NADEX virtual trading competition that's on. Look at the front page of TFNN, 12,000 green ones being given away. So you're getting paid to learn. You're getting paid to experiment. And not only that, you're going to get Daryl Martin's, the system that he's developed that goes with the NADEX platform to be able to hone in on the specific, most convenient time frame that and instrument that you'd like to trade. This is an opportunity. So go to the front page, check it out. That's number one. Number two is let's get all this stuff out the way because you know that I'll run out of time. By the end of the show, I'll be having 6 or 7 things to say with time running out. Let me wish all our listeners here at TFNN who are celebrating the Jewish New Year this evening a really happy year, a healthy year, prosperous year, and most importantly, a peaceful international year. That's hoping for a lot, but let's put that on the cards. Looking at the E-minis right now, let me also say thank you to John Logan this morning, Tom O'Brien, and Dave White for the 3 hours that we've just had here at TFNN. Fabulous education already today. Most importantly about the session is what does the market do? There's internal, just enough residual strength to move the market a little bit higher. How it handles the sell mode that we're in based on the Chapman Wave methodology is going to be very important. And looking at the E-minis right now, they're up $7, $7.25. In fact, having made a peak E right arm extension in the Chapman Wave methodology at 2014.50, an all-time high in 3 sessions. You came down, 2 sessions. Basically, it's the reversal session of Friday. Monday and Tuesday's big down sessions. And today we're giving back. We've got an inside bar. When we closed yesterday so sharply lower and at the lows of the day, my thinking was that we had reached an oversold condition on the short term. This is what I show my subscribers to my opening call. And one of the reasons why we had gone short so heavily over the last few sessions was because this seems to me to be a top of some significance on the daily chart. I haven't yet even got the weekly chart to give me a sell signal. So we were anticipating. We actually are out now 2 of the positions because I had really tight stops. These are particular sectors that have been absolutely phenomenally strong. I suspect I wanted this kind of a trial. I got the trial yesterday and today. My suspicion is that we are very close to those particular sectors, giving enough clues to say we have now started our downward trajectory. Now, when I'm looking at this, the 9-period exponential moving average, that purple line in the Dow at 17,127 will be the resistance to monitor. The MACD is negative. But you see that little green and red line, you see the distance, it's very narrow. And that says there's internal strength, and you can still get pop-ups before you start to see that beta, how you see the 9-period differential start to expand to the downside as the red slow-moving average starts to turn down. This point is still kind of flat. MACD, that's the MACD, and the MACD's histogram is negative at minus 7.7, and you've got the stochastic, slow stochastic at 58%. I think it's headed down towards the 30s over a period of the next 3 to 5 sessions. And here's the other thing I want you to talk about. The VIX index You know, I spent a great deal of time over the years using this as a wonderful indicator that I've developed certain parameters every day. And let me see if I've got it. There it is. Every day I got to look here. It says leg D, and watch how peak D unfolds. We're now about to make in the 120-minute chart confirmation of peak D with a high today, high yesterday of 14.94, and today's high is only 14.93. 1 penny lower makes a peak in my work. And the 120-minute Dow chart, isn't it just beautiful? You have to wonder, how does the price know to have, look at those, let me do it with a white background chart. Well, I can do it right here. The E-mini. Look, the E-mini trading up $8, 120-minute chart, had a series of lower lows. And look, they went exactly to this trend line. Let me make this trend line nice and thick and dark just so that you can see exactly what I'm talking about. There are. Look at that. Even the low that was made yesterday on the 23rd at 5:15 in the evening went just about to that point. But look what's interesting about this. There's a Chapman wave left side, right side price time match. Now, what you can see it actually beautifully. This particular technique, oh, I didn't get out my CD. I wanted to show this. It's SPX 120-minute chart. Is that what I wanted to see? Is that the one I was looking at? No, I think I was doing this one here. Yeah. If you want to take a plumb line to that peak D right there in the E-mini, this is the plumb line. And it comes in right there. There's the left side. Right there, left side. Here's the right side. Now, many people say, in the market, you come down quicker than you go up. I have just been refuting that with proof positive for I don't know how long. It's absolutely 100% true that that does happen, that you come down quicker, but that's only when you go into a bear phase of the move. And if you look at this, what would you call this? Is this an upside bear phase? A squeeze? What's the word for it? I use rocket ship. It's the only thing I can think of that has the exact opposite connotation of a crash. Rocket ship means you're zooming up, but crash means something terrible. Rocket ship doesn't necessarily mean something wonderful, but it does explain the ignition and then the incredible liftoff and speed that's attained on liftoff. And that's exactly what happened here. Well, if that was to the downside, even this ugly candle at noon on the 22nd of September has nothing like the 3 bars of the 120-minute chart in the E-mini. So isn't it incredible that your 1970.25, the low of at 10 o'clock on the 16th of September, you can go up to the peak D with using an alternative count. Actually, what happened is I used this as a phantom peak, a Chapman wave phantom peak. This starts to make it a little bit more difficult to understand the Chapman wave methodology. That's why I give these. That's why I give lessons on this. When you can use it, how you can use it, try to make it as rare as possible, but you need to know it's there. And wait a minute, I didn't even need to use that. Because, oh yes, that's right, I didn't need to use it, yeah. So in this particular instance, took you to A, B, C, D, and we anticipated that was going to be a D, and that's why we went short some of the indexes. Now, in this particular instance, what we're looking at is, look at that line. Now, my reasoning for markets that go down and hold diagonal trendline support or go up and cannot break or do hold resistance levels on the upside is that this is human emotion. And human emotion said, I feel a degree that I can call 80% of nervousness when the market was going down. But then that was relieved. And then again I felt that 80%. But it was relieved. But each time it's coming from a lower high bar. Each time, that dreaded H pattern, the scallops, those arches, taking out the left side low, then again an 80%, and then all of a sudden you have a long sideways move that says, you know what, I'm feeling a lot better, then whoosh, you get those 3 bars down, which don't even represent the 1970 to 1996 spiral on the 16th. This, in fact, has 3. There's actually four bars you can talk about from noon on the 23rd. So it goes from 1988 to 1968. So that's 30 points. and there it was 35 points to the upside. So isn't that interesting? And now what we've done is we've just filled in, and I show the two patterns. There's the H pattern, which succeeded in holding the left side low of 1968.25. It went down to 1970.50. Now you're getting a very strong candle. And what I'd said is, if that takes place, I show my subscribers every day. I show the dollar. I show the daily and the 120-minute chart of the E-minis, and I explain. I give a precept. I give a really quite a detailed account of what we're looking for, but I don't give trades, not in this. But what I did say, the H could turn into a cup formation, and that would say that if it gets anywhere to the 283 level, that 200-period exponential moving average of 1985 could in fact be achieved, and then we would be looking again at an arch formation. So now let's do this. Let's run all the numbers, and as I do the numbers, let's see if I can do it putting the 120-minute chart just on the side there. Let's go. We've got the Dow, INDU, trading right now at 17,113, up 57, having made a peak E, right arm extension in the Chapman wave, sharp pullback in the Eiffel Tower formation. That's like a capital A, up and down. And the weekly chart hasn't yet given a signal. I'll spend a lot more time on that maybe later in the week, not right now. And the 120-minute has gone to a trough C, and it's trying for a leg A up in the 120-minute chart that has 17,000. Dip 133 as a strong resistance, and 17,000 to 112, where we are right now, is very close to the 9-period exponential moving average resistance in the daily, but it's the 120-minute chart that I'm really looking at, where it can go to. The S&P, SPX.X, is in fact trading up 5.89 at 1988, and 1994 is very strong 9-period moving average resistance in the daily chart. The MACD is pretty poor, and the stochastic's very poor, and the weekly chart could be making a peak D here. We'll see what happens, and that has a target of the 1950s over the coming 2-3 weeks if, in fact, 1975 support gets taken out. And the monthly chart I don't even want to talk about because it's still in progress until next week. But look, there again, leg C, nice pop-up. And look, 1978.48 was the low, the left side low, 1978.63 is where we've gone to. Now, let me just do some of these quickly. I don't want to run out of time before the break comes up. You've got gold, GCZ, as long as the dollar's running, gold can't go anywhere. Gold is kind of stuck here. Look, there's a left side, right side price time match. Well, there are a number of things that I'm looking at in the gold. And as far as I'm concerned, this H pattern going to a lowercase M pattern is a formidable technical tool. If you don't put it into your arsenal of technical weapons, you're really missing out on something. Look at the way it worked on the monthly gold. Look at that. H goes to an M breakdown. H goes to an M, and we'll see if it's going to break below 114.68. It looked far-fetched the other day when we were at 123, and I discussed it. We've got a break coming up, and we'll talk about the dollar in a moment. I'll just put the dollar chart up. There it is. Wow. Leg C in the weekly chart. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're looking here at a chart that shows the arch formation. And look what happens. If you use the MACD and stochastic, that's fine, but you don't even need that. Look, you've got price moving up, and it makes a peak. Using the top as a plumb line. You know what a plumb line is when you're building and you want to do a straight line when you're trying to get let's see, sideways, a vertical sideways line so that you can put something together from the middle. You use a plumb line. You just pin it in and the string comes down. You pull it out and let it go, and there's a chalk on it, and it makes a line. And, of course, today we've got technology that you don't even need that stuff because it does it automatically, electronically, so digitally. What you've got is the left side to the upside, and the right side says that if that truly is a plumb line, and you start to come down, you should come down in an equal amount of time, in this case, even if there is that rogue wave to the upside. And look what happened in this particular instance of the BBHs, the BBH Biotech Holders ETF, way back from 2004. This is exactly what happened. This is the example slide 294. Here's another one, arch formation in the S&P, I believe it is. There is an exact time frame, and then what happens is it extends out one more, and then boop, it comes in exactly on the day in this particular instance. So what I've done here is that using the same methodology, I've got that price time match that we were looking at in the S&P, based on the E-minis. That's the S&P trading vehicle. And now what we've got is this very strong move to the upside after completing it at 1968.25. And now you've got a nice bounce to 1983 at this particular point. Well, if you use this particular methodology, there are many ways that you can use it. You can use it as a cup formation to the upside. Well, look what happened here. I'm going to go there. I mentioned in the den that the IBB, we were short that yesterday for a very 1% loss based on the instrument that we used. But the only reason why I made the stop so tight is that I just didn't, there was enough internal strength to say, hey, based on the techniques that I'm using, if the 9-period exponential moving average in the weekly chart and the daily chart starts to become support again, there could be a move that says there's enough residual strength in just enough biotech stocks to push it higher. Well, lo and behold, look what we've got. Potential 120-minute chart could go above 277.23 for leg D. At the same time, you've got a potential. Now, I'm saying potential because we don't know. But if the IBB starts to break 278.78, which is the all-time high, leg, I called it F/C, peak F/C in the weekly chart, that means you could still go to a D, a G/D, and that gives it a little bit more room. And that says as I said before, let me go back one step. I was talking about the we'll go to the S&P, SPX.X, that the monthly chart, the technicals were starting to fail, but the price hadn't yet given any signal at this particular price, I'm saying, not the technicals, but the price. It held beautifully up until this point, and we haven't yet made this confirmation of a peak D with 2019.26 as the potential high for this level in the weekly chart, saying we're now going to go down and we're going to break the 9-period exponential moving average, which right now is around about 1986. So we are 5 points higher than that, 6 points higher than that. And if that's the case, what we're looking at is a situation that says, don't even talk about the monthly chart. You can't talk about any signals in the monthly chart until you start to get a sell mode signal in the daily, which we've actually got now. But we haven't even got a sell signal in the weekly chart. In the Chapman wave methodology, there's a big difference between sell signals and sell modes. There's a huge difference between the sell signal in a short-term time frame and waiting for it to occur until it happens in the larger time frame. So I'm going one step at a time. That's why I wanted to make stops rather tight. So far, let me just double check. I don't want to talk out of turn. So far, the shorts that we have are still working very nicely. Yep. And now let's go to our first caller. We've got David in Oklahoma. Hi, David. How are you?
I'm doing wonderful. And you today, Basil?
I'm doing well. Thank you very much. You'd like to look at, I used to have this old Nucor Corporation. That's what you wanted to look at?
Yes, sir. I do a little Elliott wave, and it looks like to me that this done a 5-wave up.
Oh, okay. Let me do this, because if you're talking Elliott wave, give me a moment during the break. I'll finish up the notation on these charts, and we can come right back. We've got David. Can you hold on?
Yes, sir.
Great. We've got David in Oklahoma. We're looking at NUR, Nucor Corp, down 56 cents. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with David in Oklahoma. And what's the name of the city you're in?
ADA, Basil Chapman's hometown.
Oh, okay. I thought that said Ada, and that's very nice. Okay. So you're looking at an Elliott wave in which time frame? The daily?
Well, where you've got your first chart there that you just enlarged a little, the T with the red arrow. Okay,
very good.
I saw that as a wave 5. Would I be correct in saying that you've got from the low of 48.70, folks, we're looking at NUE. This is New Core Coup. I keep saying that. New Core. Core. And it's 48.72 was the low on the 30th of June. And you're taking your leg 1, the wave 1, as 52.94 on the 24th of July? Yes, sir.
And then you pull back for wave 2 in Elliott wave, and that goes down to 49.52 on the 1st of August. And then wave 3 should be bigger than wave 1, And it goes from 49.52 and it goes all the way to the doji candle peak D high of 54.60. And that is a little bit bigger. Yep, it's a little bit bigger. And then what happens is it pulls back. And then the rule of Elliott wave, and sometimes this is the part in Elliott wave that I look at, and I like to use my Chapman wave for leg fives, because wave five, I should say, in Elliott wave, because there are so many variants to the whole thing. But this one took you to that long-legged doji, and the rule of thumb that I have in a long-legged doji, especially when there's a gap up to a leg D or E. I wonder what day that was. I wonder if it was a Friday. It wasn't a Friday. Friday was the 19th. That was Wednesday.
Can I interrupt for just a second, Basil?
Sure.
Would that be considered an exhaustion gap?
Okay, that's exactly what I'm going to get to. Now, there are two ways to look at it, because invariably wave 5, now, there are different ways of thinking about this. I happen to like to see wave 5 very close to the distance of wave 1. That's just my preference. And then I know if it's much shorter, I've got to use the Chapman wave methodology, because people can get really confused where wave 5 begins sometimes, and also they can be very confused if wave 5 is very short. But for me, that often coincides with the pattern that I call the Chapman wave stork leg formation. Now, so someone that answers wave 4 is after first peak D. Yeah, you could do that, but the one that David is looking at right now fits very nicely, because it's like a flat corrective wave coming down from the first wave. This is my peak B on the 24th of July. So the big choice here is to make the peak D that I have with the doji candle, which fits perfectly, on the 27th of August, or you want to extend it up and go to the peak 5607 high of the 5th of September as D. And then this is a shorter wave 5. But whatever way you look at it, the exhaustion, I like this exhaustion gap with very high volume, and it says that it caught people by surprise. There was a lot of short covering, and now all the people that got in over the 3 days of the gap up of the 17th, 18th, and 19th, the close on the 22nd really trapped them, and today's lower low going under the 9-period moving average would just be a perfect right arm extension to the top. Peak D, I'm in your camp right now. But if this is new leg 1 down, then going to the 120-minute chart, the 56.66, and even in the 120-minute chart, you've got A, B, C, D, a perfect A, B, C, D, perfect D to the top right there on that candle. And the rule of thumb that I have with a small candle, long-legged wick up and down, says that there should be at least one, if not 2 attempts, even if you bounce up or you come down, to touch the body of the candle. And the body of the candle was between 57.90 and 57.81, and it did it perfectly for 2 days. Now the real direction is down. So even on a short term, we're looking at a daily chart. The weekly chart hasn't yet given me that kind of signal, but it is a leg E with a potential peak E to the top side, and it says 54.51 is going to be really important. I tell you what, do you have a position?
Yes, I bought the puts at 50 when it made that peak on your stork leg.
Right.
At the very peak at $59, I bought the 55 puts at 50 cents.
Okay, so now because you're in the money, you're looking great, but the only big problem now, this is October, right?
Right.
Okay. The only problem is that the premium that you see, the fantastic premium that you saw earlier this morning, and now is a little bit less, that premium, because you're so far out, well, you were pretty far out the money, let me put it this way. The premium of the put probably reached its biggest level early this morning, and if there is a bounce later today, you'll see that premium shrink. But because I have a target now of the way it's trying to fill the gap of at least touching 55.60, 55.76. That was the low of that was the gap up day. That was at 4 o'clock on the 16th. And if it goes under that, there's a real good chance that 54.50, which is the 9-period moving average support in the weekly chart, is going to be a very strong support level. Here's what I'm thinking. Because you're in puts, I would do this. I'd take off. You don't have to do. Listen to me. You don't have to. You're the one that got into this fantastic position. But if I was in this position, what I would do is I would immediately take off something both to reward myself and to say, I've just seen one of the best premiums in a shortest period of time with a far out the money. That was really far out the money, 50, when it was in the 58, 59 area, to be buying 55 puts and to see within days a beautiful premium. You must be up 150, 120 or 150%, or at least it must have been close to that this morning. But as far as I'm concerned, I tried to grab as much as I could. I'd keep some kind of position as a core position looking out, because I think you're absolutely right. Going out into October, I think this is going lower. My target would be between 54 and 53, as long as it doesn't take out 57.80 to 58.20. If it bounces there, it says, wow, that's a high-level consolidation. I don't think it's going to do that. I think you've identified this correctly. So I would take a little bit off, and I'd try to put it back on any bounce towards 57 to 57.30. I'd be putting those puts back on. But keep a call, because the way this kind of utility is acting, it could, in fact, pull back quite a bit more over the next 3 days if there's no bounce at all.
Wonderful. That's kind of where I was looking, was down around that 54, 60.
Yeah, and I think that would be reasonable, and it's been such a spectacular winner that you know that people will be coming in to try to do some buying on all the dips, because it was a beautiful strategy, and I think a beautiful strategy up until now. And that's the reason why you could do two things. One is you could either take something off right now, or you could put a trading stop based on the price. It's at 56.05, and I'd have about a 15-cent trading stop and just hold it all the way through, because maybe by the end of the day it just keeps going down. In other words, I don't want you to get out of the position just because I'm talking about it. Think it through and just say that in the 120-minute chart, it is getting kind of close to at least a little bit of a bounce, and that bounce could take it up between 65 to $1.10 on a reasonable bounce. But I think that the die is set. I think that the weekly chart is telling us that this thing is going to take a breather.
Okay, I appreciate it, Basil.
Can I just ask you a question?
Yes.
What brought you to? Why did you pick this? How did you pick this?
I've been watching this for a long time.
Okay.
I don't remember why, but the sector itself is so weak that is one of the reasons I chose this one.
Okay, very good, because I just want to know if you did a scan or if it was on your radar. Yeah. It's one that you've just been patiently waiting. I love the patiently waiting story, because you know what? When you patiently wait, it means that don't be too impatient to get out of your position, because you did this correctly. So I don't want to tell you, just get out of everything. I want to say, take a little bit off to reward yourself, and even that little bit you could have a trading stop, because the way it's acting right now, it's shown no strength whatsoever. So you might want to just say.
Basil, I remember what led me to this. It created a bearish butterfly, if I remember correctly.
Okay, you know what I'm going to do right now? Let's go to that right now. We're going to go to the strategy. This is the art of the charts, folks, TFNN.com. This is what Dave White did based on Tom O'Brien's work and his own work. Let's just go there, and we're going to type in. We'll go right here, and we're going to, so this is the butterfly. I'll go to the Gartleys, and I'm going to say, okay, give me NUE. Let's have a look at this. NUE coming up. NUE, did I type that correctly? Let me do it again. NUE. All of the charts. There it is. Okay, so it had one Gartley way back in May, I believe it was, pulls back, and now it is, well, it's developing something It isn't quite a butterfly, but I think, or maybe on a shorter term, actually the 120-minute chart, I wouldn't be surprised if that is a butterfly. But right now it's got a very high spike to the high. Oh, I think you got the right strategy. And not only that, A, B, C. I think this made a peak F in the moving average that I'm following. Well, I'm pleased that you had a particular strategy and you had the patience to run through it in a very orderly way. I think you've got yourself a very nice trade. Just remember, look at I would still think more of a trading stop and use it as 15 cents as a 55.99. If it pops to maybe 56.20, I'd say, okay, now I'm taking off some of the puts at least. But in the meantime, you're still looking good, and now you're getting back that premium. Hey, fabulous. Thank you, David. Thank you for calling.
Thank you, sir. You have a wonderful day.
You too. Thank you very much.
Bye.
Let me just make a note for myself, NUE, because this is one now I have to follow because of that turnaround. All right, folks, let's go on here. We've got a break coming up. I want to show you something that I think is extremely important, and it is how does the market respond to news, good or bad news. In a bear phase, the market responds constantly, just consistently. Every time there's a rally, that rally fails very soon, no matter how strong, and then closes that particular bar sequence, whether it's a 121-minute chart, 60-minute chart, whatever, towards the low of that particular time frame. So we're going to be watching this because the VIX index has just made a peak D in the 120-minute chart. But the stochastics at 85%. That's good. This is very different to the way it was up until a week ago. Every time, even a week ago, even that turnaround last week on the 17th, on Wednesday, saw the VIX pop sky high, made a new recovery high at 1453, and then closed way down. It went down, in fact, to 11.73 and closed at 12.05 on the 120-minute chart. Now what we've got is a very clean A to B to C, peak A, peak B, peak C, and peak D. And what does that mean? It means that at D, I'd say to subscribers this morning to my opening call, that this is a very interesting period because if the VIX only comes back and then holds in the, I wasn't using the VIX, I was using some other instrument based on the VIX that is an ETN. Well, what I was saying is that if the 200 period and the 9-period exponential moving average starts to hold the support, that'll be really important. That'll be the first time that there's buying in the volatility index, and that's normally hedge fund buying because you've got to have big bucks to keep this thing afloat because its natural tendency for a long time has just been to go lower and lower and lower. So I'm watching this very closely. Why? Because if the VIX index closes today, regardless of where the market closes, but if it does not close under, say, it's at 1395. If it doesn't close under 1370, let's be safe, 1365, but instead closes towards the 1405, 1415 area, that's going to say, hey, enough people are buying this volatility index, and it is starting to work, and that means you've got to keep it in mind. If it fails completely, it says, ho-hum, volatility index has become a useless tool once again, just for the short term, because it's going to be going down to the low, to the 12s or the 11s. But if it's holding up here, it's going to say, that weekly chart is starting. Look at the way the weekly chart is starting to build strength in the VIX index. Monthly chart, I can't talk about until next week, Tuesday, Monday, I think it is. What is it, Monday? Tuesday. Tuesday we close out the month of September. Let's see where it closes then. But in the meantime, it's holding pretty darn well. So, I wanted to just discuss that. And it's a DJ in the den, a couple of questions. Yep, the art of the charts, very good. Oh, yeah, fabulous tool, the art of the charts. Check out, TFNN. We've got so many ways of just getting a great education. There's the music. We've got the music coming up. I tell you what I'm going to do. I'm going to come out of this break, and when we come into the break, I'm going to go through the IWM and some of the other indices, and we'll talk about it. Then, of course, you've got Larry Pesavento. What more could you want straight after my show?
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. Yep, don't forget to listen to Larry, 47, 24, 47, 29. Just to mention in the den stock that I've not followed. Let me see what it's called. Trans-Canada Core. I've seen the name, but I've never actually tracked it down. And it is trading at TCP, is trading at 53.20, down 64 cents. And this is fascinating because what did it do? It had an incredible parabolic move up to a high of 58.40. Peak D, Eiffel Tower goes straight up, straight down. That capital A, right arm extension, failing technicals, and like a rogue wave. This is just a beautiful example. 58.40 should give back, and it should test the Roman candle, Chapman wave Roman candle of the 15th of September, the lower. If it gets into the 51.90 area, there's a real good chance it's going to test 51.63, the low of that, and take it out. The weekly chart has got a leg F with a very, very strong chance that it's a peak F. Now, long-legged doji says, watch out for that low, 51.63. A break under it means that you're going to start to close lower than the 9-period moving average in the weekly. And on the upside, it says a rally to 57.19 that holds. 57.20s that holds, says, whoa, be careful, you could retest that high. I just don't think that's going to happen. Now, let me just look at the monthly chart. Monthly chart says, this is leg, oh, I can't do it quick enough. A, B, C, D, new one, A, B, C, D, E. This could be an extension F. Got to watch this one real closely. All right, hope that helps. Now, what I said was we were going to look at look at the IWM. The IWM, even now, is having a rally of woohoo, 0.30%, up 33 cents, from making a low today of 110.60. So there could be a bit of a bounce based on the 120-minute chart. Yep, there it is, trough D, and it should be able to bounce a little bit, but I don't think it's going to do all that much. And what's most important is the pattern that's forming in the weekly chart, just this huge trading range. Watch out if it takes out 109 support, because whoops, real quick trip to the 107, 106 area. And that monthly chart, everything about it says probably a peak F that we've made, not a recycle C, but only a close in the monthly chart below 107 will really confirm that that, in fact, was a peak F. You got the QQQ series, and I'm just about to, this is a QQQ series. Yep, there's that H pattern, the arch formation at the top. We call it a rogue wave, 2 rogue waves, in fact. And watching the weekly, because the weekly hasn't yet given me a signal. This is amazing. I'm looking at these charts, and the dailies have all said, hey, we're having a tough time. But the weeklies say, what? Who us? Who us? But there are internal signs, technically, that say that if the QQQ series goes under 97.50, it's at 99.48. That's only 2 points. But if it breaks that within the next, I'd say between now and a week from Friday, that's going to be the signal to say, all right, now we're going to take a timeout. Calling it just a timeout for now. And one of the reasons why I'm doing that is if you look at, oh, this is going to take me into a little technical a voyage here. The weekly chart, if I can clean it up just a little bit. The weekly chart of the Dow, I've done this 1,000 times. There's no other way I can count it but a peak B at this particular point with a high of 17,350. And that is saying 16,333 should not be taken out. That's number one. But it also says that on this pullback, and I do believe we're in a consolidation phase, the up channel support at 16,666, somewhere around there, is going to be really important. Hey, I say it's really important. We haven't even broke under 17,000 yet. So I'm just going it one step at a time. The dailies are saying, having a tough time. Let's see how we come out of this and watch that VIX index. And the weeklies are saying, give us another week to really make a decision. So thank you for being here. Did I hear the music? Yes, I did. Here's the music. So, folks, have a wonderful day. And once again, Happy New Year to our Jewish friends. And this is going to be the start of the New Year this evening, and it goes through for a couple of days. And then you've got Yom Kippur. I think that's a week from Saturday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, monitors and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.